Hi, my name is Kevin Steele, fractional CFO, chartered accountant, and I've also built and sold a business. One problem I see every single time when I come to working with a new fractional CFO client is messy data. If you have messy data, that means you can't make good decisions. Garbage in, garbage out. First step of every single client I work with in the first month is cleaning up the data. There's never been one client I've worked with where I've walked in and went, you know what? Your data's perfect. If you want to make good forecasting, good budgeting decisions, we need clean data as the starting point. Remember, folks, garbage in, garbage out, GI-GO. So what is the actual real cost of making decisions on messy data? Well, best way to explain that is by showing an example. So let me just share screen. Okay, so now we are looking at a combination of two things, messy data and clean data. First of all, we'll talk through the messy data, and then we'll look at the clean data, and then we'll look at how that clean data helps with actually making decisions. So we're looking at this dashboard here. So we can see at the top, we've got some key performance indicators. So we've got the total revenue. We don't know our gross margin. We know our net profit, and we know our staff cost ratio. And this is a very simple profit and loss account. So we've got revenue there, 2.4 million, staff and wages all mixed up in one account, some subcontractors, premises all mixed up in one account, some BD and marketing, professional fees, software and tech, and other costs. And in this example, we also have some unreconciled bank transactions. So if we have unreconciled bank transactions, what that means is we're not working with the most up-to-date data. And as part of a month-end close process, which means once we reach the end of the month, we want to make sure all our transactions are reconciled. You cannot make decisions on a business based on messy data with unreconciled transactions. And also, just looking at this, we just have a monthly overview here. We've got no comparison to last year. We've got no comparison against our budget. We've got no forecast. We just have bars of how much money we made. And we also have a cost breakdown here. All the costs are in one kind of bucket. There's no structure, and we can't actually tell our gross margin at all from this data. So if we now go to clean data, there we go. So now we can see this is starting to make a lot more sense. Let's look at the P&L first of all. So instead of one line in revenue, we've actually got retained client fees and project fees. So now we can start to make decisions on, okay, should we increase our retained client fees? Should we increase our project fees, etc.? We've also got our team split out into different departments. So we can see how much the delivery team costs, how much we're spending on freelancers, contractors, project materials, media, delivery tools and software. And we've also got that broken down further in our overheads. So now we've got a split for insurance and legal, finance and accountancy, etc. And now we can calculate our EBITDA, our depreciation, interest, and our net profit before tax. And we can also see here our kind of hero cards make a lot more sense. We've got our total revenue, but we can see it's 12% up versus last year. We've got our gross margin, we've got our EBITDA, we've got our net profit before tax margin. And also down at the bottom here, we've got some new things here. So our actual, what revenue we actually achieved, our budget, what we thought it achieved, and our prior year, what happened last year. So now you can see this is a lot more useful because we can see what we achieved tracking against our budget and what happened last year compared to the messy data. We just have this one bar, which doesn't really tell us an awful lot. And as you can see here already, splitting this into more detail, a hell of a lot more of analysis and things that we can do to analyze the different parts of the business and make decisions. So total cost of delivery team, directors and senior management, ops and admin, and then what we thought would happen, our budget against what actually did happen, our actual, and then the difference. So we can now go, okay, we're over budgeting, we're under budgeting, and we can get a lot more accurate with our projections and our forecasts, which allows us to make better decisions. And if we take that one step further, if we have clean data, then this allows us to do things like a goal seek. So in this specific demo company here, if the EBITDA of this company was 503 and we wanted to have a look at the difference of revenue and the difference if we added our staff costs, for example, let's say our target EBITDA was 550. 550, solve. So if we increased our revenue by 10%, we would get that close to our goal. In this case, it's over by 178. But if our staff costs increased, by 20%, then that would decrease our goal. And we can kind of add all these different little accounts and perform this analysis to see what we want to get to meet our ideal target, whether it's gross profit, retained earnings, cash flow, etc. So imagine trying to do this with this. This is something you cannot make decisions with. This is something you can start to make decisions with. However, if you're a company that's between, let's say, 1 to 20 million, this is going to be split even further, because splitting things out in the chart of accounts at the nominal ledger level, so nominal ledger just means the actual categorization of the accounts, it gives you more power to use that data for forecasting and analysis. So under ops and admin staff, under software, you might even have subcategories, but getting this correct in the first month is what any good fractional CFO should be doing. That should be their number one task in the first month, coming in, looking at your accounting system, looking at your chart of accounts, going, okay, how can we rearrange this financial information so it makes more sense, so we can feed it through to the budgeting, to the forecasting process, etc. Cleaning up data is so essential. So if you're thinking of working with a fractional CFO, just make sure they clean up your data first, because without that, everything else is garbage. Garbage in, garbage out. Anybody could make the most beautiful reports in the world, but if they're not based on solid data methodology in the background, in the finance system, again, garbage in, garbage out. Hey guys, just a quick side note. If you're watching this video thinking, hey, this could be useful, feel free to reach out. I'll map out your entire business, no cost, no commitment, and give you a clearer picture of your business health. DM me on LinkedIn or email me directly. You can find the contact details in the description below. But for now, let's get back to the video. So now that we have some clean data, what does the very end of that process look like? What are we going to use that clean data to do? This is an example of a board pack I put together for some of my clients. This is, of course, demo data, so just example data. But if we have clean data, then we can do this kind of thing. We can put together an executive summary of revenue, EBITDA, profit after tax. We can give commentary on whether revenue is ahead of the plan, our cash position, our head count. We can look at kind of the key financial metrics. We can look at revenue, profitability trends. We can see how our profit and loss breaks down. We can track our budget against our actual, our budget being what we thought would happen, our actual being what actually did happen. This is demo data, so everything is just a 0% variance at the moment. We can kind of dig a little bit deeper into our profit and loss broken down. This is actual, so this is what has happened. This is a future, what we think would happen. And we track this all on a monthly basis, compare what did happen to what we thought would happen. Same for the balance sheet, same for our cash flow position. And then we break down our KPIs and our operations in a bit more detail. So average monthly salary of our employees, average revenue per employee, our website visitors, the cost per website visit, more into our kind of margins, client net promoter score, pipeline value, staff cost ratio. Have a look in more detail in some financial ratios like staff divided by revenue. We can have an org chart in here, so we can visualize our leadership team. We can look at our age debtors. That means who owes us money. We can look at our age creditors, who we owe money to. Nice breakdown. We have a look at some scenario analysis, and then we can kind of highlight key decisions for management team. So for approval, for noting, for discussion. Then we can add in some management commentary, a rolling 12-month summary, etc., etc. So this might look cool. It looks even cooler if you switch it to light mode. But unless you've got clean data, it can look cool, but it will have absolutely no substance. I could produce this for a client easily, but unless the data is clean, it might look good, but all the information in the background is all going to be garbage. And that means that we're not making good decisions that are accurate, that are actually going to increase the performance of the business in a meaningful way. So that's why clean data is so important. You know what I'm going to say? Garbage in, garbage out. So now you know why clean data is so important. Again, garbage in, garbage out. But budgeting will only take you so far. For example, revenue, you can go, okay, I expected to make this next month. I actually made that. That's the difference. Okay, cool. But Cash flow doesn't act as a simple difference. There's all kinds of mechanics in the background when it comes to tax, when a customer pays you, when suppliers pay you, etc., etc. Cash flow is a whole different art in itself and one of the most important things to be aware of. So in the next video, we're going to do a deep dive on cash flow. We're going to look at short-term cash flow, medium-term cash flow, long-term cash flow, and how we go about forecasting that. Tune in for the next video. It's going to be a good one.